Right, so this Linqto controversy. I'm going to give you in this video everything you need to know about the Linqto controversy as it stands right now. There are things that are developing and it's a whole mess, to be honest. And I just want to explain exactly how it looks right now, everything you need to know. So when things happen in the news or things happen on Twitter, you know what's going on and you're up to date. So I'm going to do my best. This is going to be very uncut. If I need to show things on screen, I'll show them on screen. But really, this is just a conversation between me and you. I'm just telling you about it like you're right here in front of me, which you are actually, which is such a weird thing to think about. Anyway, so Linqto is this company that allowed, and this is a great idea, by the way. I see a lot of people who promoted Linqto getting really hard time, like people coming at Zach Rector for talking about Linqto before and stuff. Linqto was a good idea. Linqto is a good idea. There are reasons why it wasn't a good idea in the end. Not necessarily the idea was bad. It was the operating of it and the way in which that was done. Linqto is a good idea. It allowed investors, smaller investors, to access opportunities that they typically wouldn't have been able to access. So pre-IPO companies, and when I say IPO, I mean that's the process of a company going public. So, you know, a lot of people were involved in it on the Ripple pre-IPO. So getting Ripple shares before Ripple actually goes public. Okay. So we typically would never have got those opportunities to invest in Ripple outside of Linqto. So Linqto offers that. Now you might be wondering, how do you in fact do that? How did Linqto operate that business? How did it work? Well, it operates using something called SPVs. These are special purpose vehicles. SPV, there's nothing inherently bad about an SPV. We have a lot of people going crazy on social media right now saying, oh, it's SPVs, they're all scammy and stuff. SPVs are not scammy. What they are is a business that is set up with a specific purpose, right? A special purpose vehicle. That business isn't to hire employees. That business isn't to do anything else outside of purchase shares. In this case, it was purchasing shares. These companies have one specific purpose, and that's all they do. And so the whole reason that these SPVs are created is to do the thing it was made to do. So in this case, you want to buy some shares from Linqto in Ripple, let's say. Well, you're not buying from Ripple. You're buying a section, a portion of their SPV, the business that itself buys the shares at Ripple. So the SPV is the holder of all of the shares that people think they're getting. So when you go through Linqto to buy these pre-IPO shares, you're actually buying basically a share of their SPV. You don't have direct exposure to the shares, you have exposure to the SPV. And it's that functionality that allows the everyday investor, essentially accredited investors, to participate in these pre-IPO shares. Now, that's actually what SPVs are made for. So there's nothing scammy about that. The issue that's happened with Linqto is they've done a multitude of different things here. The first one, which I think is the trigger for why the SEC and the Treasury Department, what's it called? I've forgotten. There's another element, there's another entity in the US that are coming after them. They have basically realized that there was a markup happening between the actual price of the shares versus what was being displayed on Linqto. That's not inherently bad, okay? That's really not the bad thing, because Linqto have to make money. What other revenue model would they be applying? There has to be a markup. The issue is that either the markup was too excessive and or the markup was not communicated to the investors. So the investors didn't actually know what the markup was. Now, to comply with regulation, you actually have to show what that markup is. It has to be disclosed. It wasn't being disclosed properly to the investors that were taking part. And so what I mean by this markup is, let's say the share price of a pre-IPO share in Ripple, let's say it was $22. Well, Linqto might be selling it at $30. That's an $8 markup. Now, if they mark it up too much, which $8 might be too much of a markup, then they can get in trouble. And that's kind of maybe what's happened here. The other thing is, if you mark it up and don't tell investors that it's marked up, you're also in trouble with the SEC. And so what's happened here is that has been a trigger point for the SEC to come in and say, hang on a second, what's going on here? Only to discover more things that might be happening. And so there's another thing that's happening with all of this, is that there was theories running around that the owner of, or the then owner of Linqto, was actually pocketing some of the profits at the same time as declaring bankruptcy. And so it's kind of turned into this Sam Bankman-Fried type of thing happening. And he's in big trouble. Possibly even jail time for this guy. And he essentially was declaring bankruptcy, but also potentially taking money out of the investors' pots. Now, John Deaton, who's a big voice in the legal space in the XRP world, he's basically asked I think it's the new guy. I think he asked the new guy on stage, what's happening with the money?
Is my money there and safe? Yeah, your money's there and it's as safe as, okay, I got to throw out the words. It's safe.
Where is the money? And they said the money's all there. So we're going to get into what that means for actual investors in a second. But at least I hope this explanation, even though it's kind of rough around the edges, is kind of giving you the understanding of this space a little bit better. So essentially, if you have invested with Linqto, just know that you have invested in an SPV. And that's normal as well. Additionally, what I want everyone to know is that if you've got people who have promoted Linqto in the past, that was completely appropriate. I don't even think, I've seen people really going after some influencers saying you promoted Linqto. It's Linqto, the idea, the concept is good. The management of it, the way they weren't disclosing things is not the influencer's fault. It's not their fault. You can't do due diligence on that level of granularity in the business. You don't know how the business is actually functioning on a day-to-day basis. So Linqto is a good idea. It will always remain a good idea. How they've delivered that and some of the practices therein haven't been very good, right? So where do we go from here? There's a load of people that have invested in these SPVs. So, and by the way, lots of good investments in these SPVs as well. Lots of them have actually turned, I think the number was like, there were $300 million worth of investor money in Linqto in the SPVs. And that's since grown to like $3 billion. So the investments, the actual businesses that people were investing in were very good investments. This is a multiple that you typically wouldn't get as a smaller player in the crypto space in this kind of world, in the private equity kind of world. This is really, really good. And so now we're wondering, if you've invested, do I get my money back that I invested? That seems pretty unfair. Or do I get the fair market value of the assets when the company goes down? Because the fair market value would be basically a $3 billion payout for everyone that's involved, obviously divided up based on your investments. Whereas getting your investment back, your initial investment back, is like, okay, so where's the profit going? Because if you're only giving 300 million back to the audience, when there is actually 3 billion, where's the money? Who's getting that money? And I think that's maybe part of the cash grab attempt, maybe of the owner. That's just a bad situation. And so I know a lot of people are thinking, where am I going to get my money? Am I going to get my money back? In what form am I going to get my money back? And that the problem that I have right now, and you are completely up to date at this point, is that we don't know how that's going to look. It's literally that. I know it's the worst answer to be giving. I don't know how it's going to look. So but what I do want to give you is some words to look out for in the legal processes here that I have that show good signs that you will get your money back and actually a fair market value of your money, of your investments back. So with the gain that you've seen in those investments, that you also get that gain back based on the fair market value of that day when it happens, right? Which is, I think, reasonable to do, especially if they say that the money is still there. This is really important. So some of the things we want to be hearing are the words settlement. We want to hear settlement. We want that to be done. It can be done in the next couple of months here, but because there is the Department of Justice involved, there's the SEC involved, it seems like this is a complicated case, and complicated cases, as we know, being in the Ripple world, we know that this can drag on quite a long time. So we want to see settlement. We want to see words like compensation, remuneration, these kinds of words. You want to be looking out for those in the in the process of this legal happening. But I wish I could tell everyone that they were going to get their money back. I just don't know at this point. If we are to take the new owner at his word and say the money is there, then I think it would be reasonable to assume that we would get our money back with the growth that those assets have seen as well. One thing to note here as well is that we should have been paying attention, and we've completely missed this, and we need to pay attention in the future, is that Ripple have now announced via Brad Garlinghouse, we're not affiliated with them anymore. They're not actually, Linqto are not getting direct access to pre-IPO shares in Ripple directly. What that means is they were getting them directly previously, which is very interesting because in December, I think November maybe, 2024, I'm trying to remember off the top of my head, Ripple actually pulled out of their agreement with Linqto back then. They pulled out for one simple reason. They were not happy with the business operations of Linqto. If we had just paid attention to that, we would have seen this coming and we would have taken action and our money wouldn't be locked in Linqto. Isn't that fascinating? So what we really need to be doing here is these little partnerships, just as it's important to see these partnerships happen, like where you join a partnership, we also need to be looking at what these companies are doing when they're removing themselves from partnerships and then asking why. Why has that partnership deteriorated? What reasons? And is that something I should be listening to? Because we could have seen this. We could have seen this. And it's kind of, I'm disappointed in myself because how could I not have seen this? But also, no, I don't think anyone saw it. It's really tough. So on this channel, I'm going to try to update you on this system, but on everything going on. But as of right now, that is everything you need to know about the Linqto controversy as it stands at the present time, 3rd of July, 2025. Now, with that said, if this doesn't show you that we need a plan for mitigating against upside and downside, when bad things happen, we need to have a portfolio that's structured to where you're not losing out as badly as you would if you didn't have a plan. Having a plan should be a top priority. The biggest plan, the highest priority right now should be an exit strategy, a take profit plan where you're holding a portion, selling a portion in this specific bull run. And that's why I created the Exit Cohort. The Exit Cohort is going to be an 8-week program that you can go through with live coaching, expert analysis, strategy audits, and all kinds of stuff, and on-demand content. Over 40 hours of content is going to be in there for those 8 weeks, plus the live coaching and everything. I really urge you to apply for the Exit Cohort if you're serious about turning this bull run into a lifetime of wealth and freedom that's perfectly hedged. But, so anything good that happens, you're taking advantage of it. Anything bad that happens, you're also taking advantage of it, but you're also not losing out as much as you would have if you didn't have that plan. My big question to everyone watching right now is, what is the cost of making some mistakes this bull run? Not only will that cost you money, but it'll also cost you a whole bunch of time waiting for the prices to go back up again. So if that fills you with fear and dread that you don't want to make those same mistakes, apply for the Exit Cohort. The link is in the first line of the description. Answer a few questions and I'll see you over there. Stay emotionless. I'll see you in the next one.